What's up, guys? Happy Monday. Excuse me. So, just gonna double check. Yeah, everything's melting today. Everything's just dump. BTC 10K for sure, buddy, for sure. Been talking about that. Yeah, so I'm just gonna go over. I was loosely talking about it last night in the or yesterday afternoon during the Sunday forecasting call that I was going to be looking for shorts on gold. We basically, yeah, I don't have the higher time frame stuff mapped out, but essentially, if we look at the 15, and again, this is the only real setup that I really liked here. We had talked about looking at potential sells, kind of around this region, like late last week. And what ended up happening instead is we just ran all of this to be able to kind of fund this move to come to the downside. And obviously, because this came from news, typically there's no real money kind of holding the market there. This is all going to get ran. So I just targeted the week low. In hindsight last night, I wish I would have obviously taken this a little bit lower, but because I wasn't able to manage the position and I didn't want to be getting up throughout the night, I just ended up taking my profits, and I'll kind of show you how I ended up doing it and why I did it where I did. So yeah, this was all done on E8's funded account. And yeah, so I'm going to have my first payout. I believe it comes this Friday is when the process starts. So I'll let you guys know how all of that kind of goes so that we can actually decide whether or not Fractal Markets will get some sort of an affiliate link or a discount link before we can, or we want to be able to make sure that we can actually withdraw profits and make sure that they are legit, which I'm sure they are. But yeah, just want to kind of confirm that before I start promoting their business. So yeah, long story short, what I ended up doing was I had seen, so this is kind of a tricky play. And I'm going to tell you what I essentially look for. Okay, so we had this wider sort of supply range right here, just above liquidity. We can get into some refined stuff over here, but the bottom line that I was really looking for is that we had levels to sort of induce coming into this higher time frame area. You can see that we essentially got that first tap in. So order flow is technically bullish. Now, one of the things, this is, again, this specific entry doesn't necessarily correlate with the flow chart that I have. This is more of that sort of higher time frame sweep model that I've been, again, still been working on just actually putting it into words and actually having a flow chart diagram that goes alongside it. So I'll break down just my thought process, and then I'll get into the one that actually correlates with our modeling system. So what I looked for here, as you can see, obviously we've liquidated these equals and then come into the supply range. I just have a line snapped across here. I just want to kind of back things up right to about here. And I will just kind of go through what it is that I was looking for. So you can see that we essentially have this break of substructure right here. It's a little bit more apparent, I think, on the 1 minute, if I'm not mistaken. Yeah, so we didn't have the actual chalk, right? So this is a little bit, again, trickier play because this is more of a liquidity play into a higher time frame zone, inducing higher time frame equals. So once that happens and we have higher time frame bearish order flow, it's a lot easier to kind of justify getting into these positions. If I was trading the live market and this exact setup would have showed up something along the lines of this right here on the initial tap in, I would have took this sell as well. This would have been validated for me based on the fact that we had liquidated highs and the next sort of objective in the market is to start pulling back. So you're banking on that sort of to set up for you and align with higher time frame intention, which is to take out that week low that was created on news on Friday. So my entry, super simple. Essentially what I saw was this liquidation, and this is on market open coming into Asia. liquidation of this, and then bearish order flow essentially started on the 1 minute. We didn't get like a chalk or anything like that, but I was playing into the fact that realistically, if we came down into this level, we are not expecting this to hold. At the very least, I'm expecting maybe a reaction here to possibly try to come up a little bit higher. But yeah, we need a level of liquidity to take, is how our operating system essentially works. So I was looking at this as that liquidation of these highs, bearish order flow starting. There's really nothing for demand to kind of overrule supply with, especially after the liquidation into the higher time frame POY, into the flip zone, liquidating, and again inducing medium time frame equal highs. So what I ended up doing is I watched this sort of play out time and time. Boom, we were starting to get this bearish order flow. So for me to get interested, typically all I want to see with these liquidity plays is I'm looking at this and I'm looking at an unmitigated zone essentially above liquidity. So we have liquidity to essentially take from the market. We've got this trend line liquidity or built up mitigation liquidity that we can then start targeting. We also have all of this to start targeting. We also have expectational order flow to start targeting. So all of these things combined with that higher time frame narrative allows you to get into these very high probability setups for a reaction. So let me just show you a little bit more in detail what it is that I looked for and what I was targeting on this specific trade. So again, I was looking for a sweep into here and then some sort of a good reaction afterwards, because if you think about this and we come up and we liquidate all of these equal highs or these built up mitigations into the supply zone, what's left in the market, right? More often than not, we're going to go after this low. So all that to say, essentially, as soon as I saw this 1 minute candle sort of close like this is when I cued myself to go on to the 5 second. And what I actually ended up doing here was I believe my order was just above this high right here. And then I was covering this high just like this level of liquidity to take from the market and induce and then drop down and then just play this into, like I said, expectational order flow to start pulling back. So that's basically it. We had tons of built up mitigations coming in, swept in, immediate V-shaped recovery, came down, failed to take the low, start playing the flip based on the fact that we've already taken liquidity from the market. This is an unmitigated area. So my limit just would be tracked right above this high. Still getting used to kind of trading gold with the 2 decimal places and lot sizing and stuff like that. It's obviously Trade Assistant does most of that for you, but yeah, just getting a handle on how everything sort of works together. But yeah, so that was my play. I'm just going to show you exactly what I ended up taking profits on. I was definitely playing super conservative just based on the fact that, sorry, I ended up, taking profits. My original profit target was actually right here at the beginning of this potential demand zone to start seeing a pullback and then start to drop again. But I just wanted a quick in and out to be able to get some skin in the game with E8's funded account. And the setup was there. So first target was, like I said, I was looking to target like this overall demand range that was sitting here. Technically, we broke through here. Not that I was expecting it to take out the high. I was actually just looking for this to potentially start playing back into the extreme, sweeping, and then coming down, and then hoping to catch something here during New York or at the tail end of London. How different do you feel gold is compared to? Honestly, it trades the same way. Everything trades the same, man. And that's kind of what I've always known that. I've just never really exercised it. And I'm really, I mean, obviously, like I had I had the best trading day of my life today in terms of actual ROI. But the way that they operate is identical, right? There's nothing different in terms of how supply and demand works. It's the same principles, same theory. I'm still getting used to how big of a stop loss to have, but as long as you're covering like your little structural level in the 1 minute or the 5 second, whatever it is that is kind of basing your trade idea on, then I mean it operates the exact same way. So like I said, I was looking to target like overall demand range because I was expecting to see some form of a pullback into the deeper portions of the leg before dropping down. And again, this all happened on news, so there's no real money backing this move. It's just a very illiquid market where essentially there was a huge run on liquidity. Now, what I ended up doing is when you see this sort of print, and I can't remember exactly what time this was at. What time is this? Yeah, this is getting into 10:30 at night. Yeah, so right about here. yeah, this is about 11 o'clock. I think I was watching this. I had put my hard TP once we started moving like this away from this. I just said, you know what, in case we decide to create some temporary bullish order flow, I just basically put on this, it's on a lower time frame demand zone. But as we kind of punch into this, if we start making new highs, I wanted to have my profits removed in case we decided to come up and liquidate this high one more time before then dropping down. So I actually had, yeah, that was basically that position. Could have held this a lot longer. Like I said, I was just worried about the drawdown rules and essentially maybe possibly coming up and liquidating, this high again and then dropping down. So I just wanted to play it safe and get some profits sort of banked. Furthermore, this morning's move, we've had a weak break of the high. You can see how aggressive we move away. So we're moving pro trend, pro order flow. We've had the 15-minute chalk. So on these higher time frame liquidations, more often than not, we are not going to be coming back up to mitigate all this stuff. You can see it's all efficient up here. They've already taken all of their orders from the market across these equal highs. So yeah, it's a lot easier to get into continuations this way, pro trend, pro order flow. So let me just show you what that looks like. And actually, we'll just kind of exit out of here. Okay, so let's go like this. And I just had this placed like where approximately is sitting, and I'll go over this a little bit more in detail. So had the break of structure. Now this is, yeah, again, not premium or discounted price. And the reason why I didn't necessarily steer towards doing that, it's really simple, actually. It's because we just had this higher time frame liquidation. Order flow is so heavily bearish. I was looking for little internal details to be able to get myself in a position. So I'm just going to show you what that looked like. Again, these are not like, I wouldn't say they're textbook moves. They're a little bit tricky, to be honest with you. But when you start to see that, all of this imbalance is resting in here, there's really no reason for price to start pulling back. There's nothing holding price in these levels. You're just going to look for these minute details where essentially you would just want to be able to see a run on liquidity, breakdown, a sweep, inducement, and then get in on continuations. Like that's essentially all I've done for this continuation model. I might try to build a flow chart around it at some point. Obviously, this is more, again, just understanding liquidity, where it's built, where expectational order flow is going, all that kind of stuff. So let's go like this, get the 1 minute. So what I had seen was this guy right here, this little inside bar, just above, we essentially get that first tap in right in here. Move this across. And all I did was I actually looked at trades in here. I actually got involved on this trade right here as soon as we liquidated, got taken out at break even. I also looked for a trade in here on the 5 second and couldn't really find anything super solid. Why I looked there was because essentially we had this change of character that happened here as well as here. And then I was looking for built up mitigations to be able to sweep into this level and then drop down, all kinds of liquidity to target. But what ended up happening is, because we failed to make a new low, usually what's going to end up happening here is that this high is going to end up being weak, right? We're creating demand, we have liquidity to take, and then creating liquidity to target. So if and when we run the high or come close to the extreme, all I was looking for was that lower time frame confirmation in this area, provided we didn't break out of what we were already reacting to, which was this little inside bar over to the left hand side. So once I looked at this, I essentially said, okay, well, what are we going to look for criteria? And again, same exact thing as every other time, right? We have liquidity to target, we had liquidity to take, we liquidated the structural high. I was looking for stuff in and around these regions right here. This is very poorly developed. You can see obviously this is going to get ran. We basically liquidate these highs, and all I did was, once we essentially had this change of character, we kind of built like this. I just put my order directly above this high, and then again covered the top of this so that we had liquidity to take as well as liquidity to target. And then I took this into that soft low that we had on the news candle from last week on Friday, I believe is what I was targeting. So this one ended up running, I think, like 14R. And then this guy ran 45R at full volume. So those are my two trades. Obviously, yeah, we didn't come into premium. We didn't react to this sort of supply. But again, these are things that you have to realize. It's a little bit more, I don't even want to say advanced because I feel like it sounds pretentious, but it's just about understanding that we've just liquidated all this. We've had such a heavy V-shaped recovery. We have nothing to go after to be able to mitigate. Like the market doesn't want to move that way, right? It wants to now move back down to here to basically mitigate out of these positions to then continue on its merry way, right? So for me personally, I was more than happy to get involved. How it developed, like I said, if you look on the lower time frames, I would have loved to have gotten involved, something along the lines of on here, this supply zone that kind of got created across like this. Probably would have had to look at a 30-second and look at this zone like this. And ultimately, this would have gained a lot more relevance had it broken this low again and then swept up into here and then been able to drop down. That would have been a lot better play for me. But yeah, again, because we didn't break this low, ideally what we would have wanted to see is probably a run on this high, or looking at stuff at the more extreme area. We didn't get criteria there. We did get a immediate break back into the range, and then essentially look to target liquidity after taking the last bit of liquidity across the equal highs. What makes that M1 POI so important? So if you look, this is the M1 POI that creates that initial reaction, right? So this is that first one that taps in, pushes down, and then we come into sort of like this. We run on the high, fail to take it, and then as soon as we close back into the range, ultimately, I'm just looking to get involved based off of this being that initial reaction to it, and more often than not, we usually liquidate this high. So this is just a pro-trend, pro-order flow move. This doesn't really do anything. It doesn't really break anything, but we seem to be reacting to it. So we just act based off of what it's respecting. As it pushes down, pushes back up and liquidates and then immediately drops back in, we're banking on this to come down and take out expectation order flow lows. So if you wouldn't have saw a reaction, I would never have chosen it. If we wouldn't have had a reaction to this, something like this, I would have probably started looking around this range. And in all fairness, I was looking at criteria to potentially see this move up into here and then give criteria. This was this morning at the gym, and we ended up reacting to the range again. We liquidated, like I said, complete V-shape recovery, got involved, and then it just drops like a bag of hammers. So yeah, the only reason that this has any sort of relevance is because it's already reacting to it, tapping in again, liquidating. But yeah, like I said, I would have more than likely, if I'm looking at this right now, I probably would have liked to have gotten involved with something like this as well. Potentially would have potentially got in on the liquidation of this, failed to push down, and then look for that same thing, right? Because all we're trying to do is collect the last of the orders above any sort of liquid regions before we end up dumping off. Any questions, everybody? Again, this is not like our ideal setup. More or less would come from an area of a sweep, which is technically this POI like this. The market does not react perfectly. Okay, like that's not the way the market operates, unfortunately. It's kind of a read between the lines. This is my, again, first time trading gold. I was watching that this was going to hold, but you can see we just have very, very weak closures above, very, very weak closures above, immediately closed back down, and I got involved based on the fact that this seemed to be a strong level, just liquidating just above each time. Yeah, POIs can be mitigated multiple times, right? It's so like the liquidity, these, like, you have to remember too that expectational order flow liquidity is far more important than equal high liquidity against order flow, right? So understanding that ultimately we could have came up to here, right? We could have easily come up to here, and that would have been a valid trade as well. But all I'm looking for here is, where is liquidity built up in the market the most? It's going to be here, right? The market is going to want to pull down to this at some point or another, especially when you zoom out and look at the overall picture of what's going on. You have to understand that ultimately this zone right here, the initial tap, what do we look for? Once we tap a zone, we want to see a liquidation of the zone. We liquidate the zone, we get a poor delivery. I'm looking in here, same thing. We just to say liquidate above it, you probably would have covered this zone anyways, had you used a 5-second confirmation, and you should have still been in the trade. So this zone has gained relevance based on the fact that we've already reacted. We would look to get rid of the early sellers and then do the exact same thing again. So this typically doesn't happen, this second one, but because I wasn't on the charts for this, I was essentially waiting. Oh shoot, here we go. 2 seconds. I was essentially waiting for just go like this. 2 seconds. To the one. So yeah, I was waiting to kind of confirm this zone right here. I was waiting on the 5-second. I had everything drawn in, very poor development in here. So once we break above this high, if you look, it's the same thing as the higher time frame, right? So if we look at the 15, right, we get the initial. So if we looked at this entire supply range, something along the lines of this and like this, we get the initial tap, we liquidate the tap, push, liquidate one last time. I'm sure this was in the back of my head while I was making these decisions. This same fractal nature was happening right here on these continuations. And all this is that higher time frame continuation, same as the other one, probably an inside bar on relative time frame. So with every continuous mitigation, you look for liquidity of the last mitigation. Okay, so typically I do not trade them unless there's this higher time frame liquidation or inducement into a deeper portion of a higher time frame POI, and then I will look for that exact same modeling system within these continuation areas. So every time continuous mitigations, you look for liquidity of the last mitigation. Essentially, yes. Like I said, I typically don't trade this system. It's still a pro order flow model. The only difference with how this was taken is ideally we would have liked to see this come into the premium of this overall leg right here. But reading between the lines, looking where liquidity is built, where's the market going to tug to? Where does it want to go? Where are orders stacking up, right? So the more that we consolidate and we have a run on liquidity across BSL and we have more liquidity resting below the low, where does the market want to go? Well, it's simple. It wants to go where the expectational order flow orders are sitting, right? I hope that makes sense, guys. I know it's a little bit, it's not even wonky. It's just, it's a different play on something that we already do, pro trend, pro order flow. But yeah, being able to kind of watch these things play out, go try building a case study around it, see if it makes sense for you. It made sense enough for me this morning to be able to pull trigger on it just based on the fact that, again, I was already looking for the sells basically since last night once I got into my position. And all I really looked for, where are we here, is for this to get confirmed, right? I was essentially hoping that this was going to break down, create that liquidity needed to be able to take, and then target into equal lows. That would have been my more ideal setup. And then this would have been my sweep of liquidity. But it didn't develop that way. So what happens? Well, if we fail to take out the low, we hit an unmitigated demand. Usually the high is going to be weak, right? And then I just look for the continuation model once we close back into the range. Do we have imbalance to the upside now that we filled the imbalance to the downside? Do we have imbalance to the upside? I think I found an in after a 15-minute internal break using the chart. I'll put it in a case study when I'm done working it out. Awesome. Thanks, Maddie. I'm not sure exactly what you're looking at. Nick, give me 2 seconds. Let me zoom out. And you can just annotate what it is that, let me go to a 30-minute. So you're asking if this imbalance would get filled on this right now, on this bearish leg? I'm sure at some point it will, but if you look at, so let me just go to a 1 hour. If we were looking to trade this long, where would you look to trade it from? Underneath liquidity somewhere, right? Where's liquidity in the market? For me, I would not be trading here. Definitely not here. I would be looking to trade underneath all of this, right? Somewhere in this wick probably. Because if we take all of this, if everything gets taken from the market on the sell side, what's left? Usually BSL. Then this whole thing might get ran. So this will get filled at some point. It's a matter of time as to when it's going to happen. Is it going to happen right now and pull back? Not very likely. Are we going to see some form of a pullback? Possibly. Are we going to react to anything relevant on the left? Not necessarily. I think that reasonably, I would say that coming down into this level, once we do, we can then start to look for potential longs, because if we've taken all sell side liquidity from the market, the only thing that remains is buy side liquidity orders. Yeah, exactly, Rukan. Anyways, hopefully that makes sense. The next play I'm looking for on gold to potentially play, and again, we're looking at this as potentially a strong low. We have seen an order flow shift. It's going to depend on how we sort of start to act in here, if and when we do, and then we can start to maybe look for some longs. This could end up running quite a bit lower. I'm sure there's all kinds of external factors within the news, as well as fundamentals, kind of pushing gold's price around. So depends on, like I said, just a lot of other things. But technically, if we were just looking at this, the only area I would be looking to potentially hedge this sell, which I've already taken full profits on, but had I actually taken it to full TP range, I would have looked for a hedge only underneath this liquid region. Go ahead, Nick.
Can you hear me?
Yep.
Okay, perfect. So do you rather like to see the demand zone hold, or liquidation of the last low that we have from this bigger demand zone for a long?
So for us to get into a long here, what we need to see is an order flow realignment at the very least. We're probably going to want to see the initial chalk. We're going to want to see something like this, and then an actual sweep and break, right?
And do you prefer if it breaks the low that we set on the left side, or
right here?
It doesn't matter? Yeah.
Well, it's again, so the development is going to be far more important than like it depending on how it develops into the zone is going to be more important of whether or not we're going to liquidate this low, if that makes sense.
Oh, okay.
Because if we kind of come in like this, we get our inducement like this, and then ultimately we have the unmitigated wick and we sweep into the wick, I would say that that's relevant, that's good enough. But if we come directly into the wick, push up, I would say that, yeah, I would look to induce this low, see some sort of an order flow shift, and then we can start looking.
Okay. Got it.
Right? So how we develop is going to be a little bit more important than just saying like it's going to be in and around this region that I would be looking to potentially get in long if and when criteria shows itself.
Okay, thanks.
Make sense?
Yeah.
Awesome. Thanks. Taking ERL, then break structure to take longs, or just sweep and order flow shift. Like I said, I think I just answered that. Did I not? Okay, awesome. Okay, guys. Hopefully this is helpful. I know this is a little bit tricky to get in. If you didn't get in, you don't have to feel bad. We're looking to potentially get into some setups. I'm hoping, let's go to our 4-hour stuff. Just kind of remove all these. So if you look at this right now, we've got all kinds of zones that we could come a lot deeper into potentially. We could see our first reaction here, possibly liquidate a little bit higher and then drop down. Like there's all kinds of different options that could happen here. We also need to correlate with news and see what's going on with Forex Factory and all that kind of stuff. So now with GU, we've just broken swing. So the next sort of thing that's going to happen in the market is potentially reacting to this low. And then we could start to look for a higher time frame pullback. Same exact thing that we've been looking for this whole time on EU as well. We've now broken down through, we're into the extreme. More than likely this will get ran, and then we could potentially start looking for sells. And we have a perfect area to be able to induce to come into this higher level of the POI and then be able to sell this again. So all sorts of different things that are going to be setting up in the next week or so for the counter trend pullback, as well as looking for a pro trend, pro alignment to be able to take this into expectational order flow lows if and when it presents. So yeah, we're just going to keep watching. That's all we can really do at this point. GJ is basically doing the same thing as gold, liquidation of the high, pushing down. I would expect to see this come down into at least here, before we can start to look for buys again. We're not going to be looking for sells. We've kind of missed the boat for it, unless we see some sort of a pullback to be able to then take them. But yeah, as it stands right now, the next moves look to be counter trend pullbacks on both GU and EU. And then getting into gold, we're going to be looking for a potential move across this low if and when it presents itself. And if it doesn't, then we're just going to wait to see what ends up happening further and deeper into price. Again, we still have unmitigated levels right here that we could then react to and start pushing forward. So make sure that you just set your alerts at the appropriate levels to be able to get involved with these trades. So I'll have this uploaded a little bit later on this afternoon. I do have to run. I have an appointment right now that I have to be there in 15 minutes. So I will see you guys tomorrow. If there's any questions at all, feel free to throw them in the trading questions section and one of the coaches will get back to you if it's not myself. And yeah, we'll see you guys tomorrow.